Well, let's get straight to our first corporate. We have Sonata Software. Well, the consolidated revenues for the past quarter saw a bit of a decline. The company, though, continued to witness a strong growth in the international IT services business. The IT services margins as well did see a bit of an uptick. Mr. Samir Dhir, the MD and CEO of the company, joins us on the show. Hi, Mr. Dhir. Good morning. Thanks so much for joining in. Well, let's focus on the international IT services business itself. You've grown at around 4.7%. Could you tell us how much of that was organic? And also in that business, the margins have moved up a little bit, closer to around 25%. Do you see further improvement from here on?
Yeah, sure. Good morning, first of all. So yeah, I think our messaging around modernization engineering is resonating well with our clients. I think that's a very heartening sign that in this market, when most of the industry peers have given results of flattish or degrowth or low single digit, we have been able to clock 4.6% quarter on quarter. And that's at the back of last quarter prior to this, which was about 4%. And that's at the back of the quarter prior to that, which was about 4.5%. So we've been consistently about the 4% mark quarter on quarter, which is a very heartening sign. As far as the numbers for this quarter are concerned, these are all organic numbers because the Quant acquisition that we announced in Q4 of last year is fully integrated at this point in time. So it's all rolled in number into one. There's no net new acquisition in the quarter, so it's all organic numbers in that sense. From a margin perspective, if you recall, we had announced last quarter that the two large deals that we had closed, and they were in transition phase in the last quarter. So we had taken the cost in last quarter, and this quarter we got the full upside of the revenue in this quarter. So hence the margin and the utilization have looked better this quarter. And these are pretty sustainable, robust margins. We believe will continue to be in the low 20s EBITDA that we have guided the street earlier.
Okay, Samir, hi, good morning and thanks for joining in. I had a couple of questions on the top line because you do have a guidance of $1.5 billion of revenues in the next 3 to 4 years. Can you just take us through the phase-wise, guidance that you're looking at? What will you do in the first year, which is by the end of FY25? What will your top line be? And how much of it will come courtesy M&A?
Yeah, so if you look at the architecture we put together, we said we'll be about 1.5 billion about a year back. We are in year one of that journey already, and we want to be 1.5 billion by FY26 end, the last quarter from a run rate perspective. And we're pretty much on that course right now. There might be a quarter or two here and there, but by and large, we're in the same zone that we had outlined for ourselves. Now, in terms of the breakdown, depending on the market conditions, we outlined that we will be growing high teens to low 20s. In good years, maybe 20s. In tough years like this, probably high teens. That's really the broad guidance we had given out. It's hard to predict because the market has been quite volatile, as you see. But even in this market, we are pretty bullish about the fact that companies continue to do well.
Sure. The second part of my question was more to the contribution of M&A because you do have about 700 crores of cash on your books. So will you be spending that for any acquisitions in this year or next? And how much of this $1.5 billion by FY26 will come through the M&A route?
Yeah, so we are not aggressively looking for M&A at this point, as we just closed one acquisition earlier this year. But if we do find some suitable properties which make sense from a Sonata perspective, we will not hesitate to do that. But at this point in time, we believe about 80 to 90% of this is going to come largely from organic. There might be a wee bit which will come from some inorganic acquisition, if that.
All right. Samir, just to confirm, you said margins in the international IT services business will hold in early 20s, is it?
The EBITDA margins, that is. So we have said long-term trajectory is to be in low 20s EBITDA. We came in this quarter at about 23, and we believe it will be around 22, 23 in that zone from a long-term perspective as well.
Got it. All right. Some peers are talking about a bit of a slowdown in orders getting closed out. Are you experiencing that, either slowdown or cancellations or postponement of orders that you're in talks with already?
Yeah, so I think we have seen a fairly secular growth trend across the board. So whether it's healthcare, whether it is banking, retail, manufacturing, we've seen a fairly consistent secular growth trend over the period of time. Now, of course, we've seen some slowdown and decision delays in the high-tech sector specifically. and that we had called out 2 quarters back. So that sector has been soft for us, as well as the decision delays have been there. But beyond that, in the other sectors and other geographies, we've been seeing pretty secular trend. There might be 1 or 2 accounts here and there, but in general, not anything to call out as a trend at this point in time.
Okay. Got that. So, I just wanted to understand how are the deal wins looking, because you said that there are 35 large deals that are under pursuit at the moment, and you are increasing your penetration amongst larger companies. So what can we expect in terms of deal wins, number of deal wins, even the kind of quantum that you're looking at on an average? What could the trajectory be? If you can throw some more color on that.
Yeah, sure. So let's talk about the order book. So I think even in the most recent quarter, we have been, the book-to-bill ratio is about 1.24, which is pretty healthy. So we feel there is no slowdown from a order book perspective. As far as the large deals are concerned, if you look at our track record, I think starting 6 quarters back when I came on board, we've been really clocking about 2 to 3 deals, large deals every quarter. And this quarter is no exception. We have announced 3 large deals even in this quarter, the most recent quarter, that is. So we believe the engine is set up to do 2 to 3 large deals every quarter. Of course, there might be some quarter which might be slightly more and some might be slightly less. But on average, we think we can close out between 8 to 12 large deals in a year. And that's really what the momentum that we are seeing. Now, these are all multi-year contracts. Once you get in, these are all digital transformation type programs. Once you are inside the program, then you tend to stay longer and continue to deliver value for the customers. Because the digital agenda, generally for the customers, whether it in the service market that we service, is very secular at this point in time. We have not seen any dramatic shift except for the high-tech industry that we called out.
Okay, just one final question from my end, Samir. You said that you can close out 8 to 12 large deals in a year. In the domestic business, you have renewed all of your large multi-year software contracts with your key customers. So you're not noticing any kind of slowdown either in deal conversions. There are no delays in deal wins, right, at the moment in the domestic business. And what would, specifically for that market, what would the trajectory look like?
So the number of 8 to 12 was for the international market because we're talking in the context of international. But from a domestic perspective, I think, again, in general, good momentum. But if you back out the IT and ITES segment, which is the tech sector, I think there are some decision delays there as well. But apart from that, the demand environment is still holding up by and large.
All right, we will let you go on that note, Samir. Thanks a lot for joining in. So the demand environment is holding up. They have a target of $1.5 billion of revenues by FY26 end. They're looking at high teens to low 20s in terms of growth, but not aggressively looking at M&A at this point in time. So that's Sonata Software. Keep that on your radar.